The cement companies, they made the most of the summers this year with volumes rising in the first quarter. What may have remained elusive though is pricing power, and that may reflect on the numbers, starting with UltraTech, which will put out its quarterly earnings today. Nikki is here to take us through what may be in store for the cement sector as a whole, and then of course UltraTech. Nikki, we'll get to UltraTech in a bit. It'll probably set the stage for the cement companies, but what would the quarter show for the pack at large?
Well, it's going to be a muted set of quarters that we're expecting for cement companies. Well, to sum up the trend, if I'm supposed to, then it's going to be a weak quarter in terms of the pricing ability of the companies. We're expecting higher input costs. Along with that, we're also looking at higher volume push. However, EBITDA margins for most of these companies are expected to contract on year-on-year basis, given the limited ability that these companies have in the face of the rising input cost pressures, and also the trend overall, the weak realization trend that we're looking at. First, to begin with the pricing power, let's look at the picture. On all India basis, we're looking at a 5 rupee per bag, a decline on year-on-year basis, but then we're expecting major pressure coming in from northern as well as southern regions, which have actually taken maximum cuts in this one last year. However, if you look at the volume picture, that continues to be healthy overall for the industry, given the kind of demand that we're witnessing both from the rural side as well as from the government side. So if you look at the volume picture, that's expected to be a healthy one for UltraTech, Shree Cement, North Base Shree Cement, Dalmia Bharat, and the South Base Ramco Cement. Also, if you look at going forward, the next plate that we have is in terms of the rising input cost pressures. That's the petcoke pressure, that basically the inflation that comes in from the petcoke prices, which have risen as much as 20% year-on-year basis. We're looking at a number of $112 per ton as compared to $94 per ton that we saw in June 2017. This, combined with the weak depreciation of rupee, is also expected to weigh down on the unitary cost or the unitary performance of most of these cement players. Also, if you look at the margin profile, as I just mentioned earlier, we're looking at a contraction coming in for most of these players, but then the big cuts or the major contraction can be looked at coming in from Ramco Cement, which is expected to have a 790 basis points contraction in its margin, followed by Ambuja Cement, ACC, and also some pressure keeping in from UltraTech Cement.
Interesting. But what is UltraTech likely to show today, Nikki?
Well, we are expecting the same set of numbers, muted set of numbers coming in from the company. If you look at the top line growth, however, that is expected to show a good 30% growth to a number of around 8,655 odd crore. And if you look at the EBITDA performance, that is, however, expected to be flat at 1,555 crore as compared to 1,560 crore, pretty much flat. Margins, however, expected to contract for this counter to a number of around 18% as compared to 23.5%. While that of profitability, we're looking at a 35% downtick at a number of 581 crore as compared to 890. Now, do remember the fact that besides the input pressures, we're also looking at higher finance as well as depreciation costs coming in for UltraTech Cement, and the other parameters which are equally important and we'll keep an eye out will be the volume figure, which is expected to be 35% higher, mainly on account of the merger or the takeover of the JP acquisition, the JP assets. On back of that, we're looking at EBITDA per ton. Again, the unitary cost is expected to be weighed down by the power fuel cost, which is expected to be seeing a 27% kind of downtick. And also, if you look at the last parameter that we have, that is the realization per ton, due to limited, due to the weak pricing power and the limited ability of the company passing through the kind of cost inflation it's seeing in terms of its prices, that is expected to be at a number of around 4,946 rupees per ton.